Welcome back to the Innovation Engine podcast. I'm your host and Three Pillars Chief Evangelist, Scott Varho, and I'm thrilled to be joined today by Rob Murray. Rob is the industry leader for Three Pillars Banking and Financial Services industry vertical, and he comes to us after more than a decade in senior leadership, driving digital transformation for commercial banks such as Wells Fargo and Bank of America. Rob, thrilled to have you on. Welcome back to the Innovation Engine. How are you?
I'm doing well and super excited to be here, Scott. So thanks for having me.
Excellent. Well, let's dive right in and let's talk about the state of the industry. Banking and financial services is there's a lot of opportunities as well as challenges and threats. How do you see those in your space?
Yeah, well, that's a pretty broad question and really a good bit to unpack there, right? It's certainly interesting. It's certainly an exciting time in banking and financial services. I'm no economist by any stretch of the imagination, nor do I play one on TV. But the word that comes to mind when I take a step back and look at the industry as a whole is resilient. Right? There's a lot of mixed signals out there. The Fed just recently had a 25 basis point hike. There's a potential for maybe one more at the end of the year. And despite that, the economy continues to grow. The economy overall is reasonably strong. So if you think about consumer spending still being positive, unemployment rate is low, inflation is on the decline. We just kind of weathered through the banking crisis with SVB. Certainly it was impactful, but it wasn't catastrophic by any stretch of the imagination. It was relatively contained. The system, I think, to an extent, worked as designed, and folks didn't panic. And so I think the biggest impact from that was maybe some tightening of some credit conditions for some of our companies, small companies trying to secure loans or what have you. But by far, the impacts could have been way worse. I think you look at it, the second half, H1 earnings. With all those economic headwinds, the earnings were mixed, but relatively strong. We'll see in Q3. And then you look at kind of the fintech space, right? There's certainly compression within the fintech space as venture capital and private equity dollars dried up. It's really showing which startups are good stewards of their investors' monies, right? Can they weather the storm? And it'll be those startups that will likely see additional funding as we come out of this time of uncertainty. So I think, overall, I think the word is resilient. Certainly there's the biggest concern that I see is the uncertainty that lies ahead of us, right? Will we still avoid recession? Will inflation continue to decline? Will the job market hold steady? And then selfishly, will companies begin to be more bullish on their spending for things like technology and software as a service and those types of things that impact us certainly as an organization?
Well, and clearly, banking and financial services are, in any capitalist economy, really important for allocating capital, keeping capital moving towards the most productive purposes. I did study economics, unfortunately, so and I actually wrote my thesis on banking reform. But if you're a leader at a bank, whether commercial, consumer, or investment, you have to think beyond the economic conditions because those will go up and down. But your trajectory and your place in that market is one that has to have a strategy that sort of transcends market conditions, even though results will move up and down with all the factors that you just talked about, things that are temporal. So how do you, in the conversations that you're having with banking leaders, what are some of the big opportunities that they see in their space?
Yeah, I think it's a good question. I recently was speaking actually internally on this a bit. And what although everything that you say is valid and true, and I think for many of our CFOs, it's easier said than done. Right. And those are the ones that allocate.
They have to report those earnings.
Exactly right. And so they're hesitant and cautious. What we saw, really coming out of 2022 into 23 was folks were very cautious at the very least flat with their spending, if not pulling back a bit. And so that indicates to me that there's just those uncertainties that those CFOs weren't willing to make, as a whole, weren't willing to make those bets. There were some, Citi comes to mind, a couple others that were more aggressive and bullish in their spending, specifically within technology, technology space and digital and those types of things. And I think they'll reap the rewards long term. But I think as a whole, there was a rather significant pullback. However, I think based on some recent conversations, I think there's a bit of a change in mood. There's a lot of work that needs to be done just to keep the lights on, right? Keep infrastructure supported and those types of things before you can, in many cases, even talk about innovation. And so we're beginning to hear mutterings, I think, of a little bit of a change of attitude.
Well, that's interesting because yeah, it is, especially in banking, though clearly other industries similarly, but in banking, it's really important to keep that compliance, that shift left conversation that's happening out there. And how do you take compliance deeper into the development processes as they do more and more things online, more mobile banking, that kind of stuff? They have to be very thoughtful about hygiene and compliance on a much deeper level than they have necessarily in the past, and especially to stay competitive against. One of the most striking things to me about financial services industry these days is the rise of all of these small players. So in the investment banking side, we've got Wealthfront, robo traders, right, like Wealthfront and Betterment. In the payment space, like Venmo, Cash App, Zelle. So, I'm curious your thoughts on this. Like, so other than partnering with these companies and bringing them into their own ecosystems, the way, I've watched as a Bank of America client, Zelle be inside the Bank of America ecosystem, right? What are some other ways that they can fend off these nimble incumbents?
Yeah, it's an interesting thought. As I think through your question, Scott, much of what you mentioned, especially the latter part of your question, really sits in the payment and money movement space. And you think about Zelle. Zelle is unique because it was ideated and built by the large banks, right, through their investment in
I
EWS.
don't think I knew that. That's interesting.
Yeah,
Okay.
and so and sometimes that's lost, right? Because they had the foresight to build the platform, and in many ways, I would argue that they led innovation in this space because because it was the competition that developed because of Zelle that created Cash App and PayPal and those types of things. So I really look at it as an opportunity, opportunity in the space, especially if you look at PayPal, Cash App, and Square. They're kind of bank agnostic to a certain extent. They don't
That's
care
right.
what bank that you use, right? And so they'd like you to work if you have an account with them. They like you to use their kind of deposit like account. But the ambiguity to it is attractive to many. The other side I would see is there's a lot of opportunity, I think, to a certain extent in the payment, or not the payment, the consumer lending space. You think about organizations like SoFi, Lending Club, and Prosper. Their risk profiles are different, right? Their ease of application and processes in many cases are better. Speed of funding is significantly faster. They likely meeting significant need with a population of customers that were likely underserved. So you unpack
Or
that.
worse, we're served in a predatory fashion by payday lenders and things of these nature.
Exactly right. And so as I think through it from an incumbent standpoint and fending off fintechs, I think it's more of maybe a multi-pronged strategy, right? It's less about fending them off and embracing and learning, right? What is it about those digital products, the services, their experiences that are attracting customers, and that not only attracting, right, but then they're adopting, utilizing, and the key here is they continue to utilize, right? And so certainly there may be an acquisition play to it, but
Sure.
at the end of the day, I think it's about learning from their experiences
That's right. Yeah.
or
I
their
think that's right. Well, I think there's something really savvy about that is it's kind of like the lines in the grass, right? And where you put the sidewalks in the park. Turns out it's better to go, to pave where they actually walk and not try to force them into your sidewalks.
That's
But
exactly right.
it's a great opportunity for banks to learn about the consumer expectations, behaviors, and things that they're looking for, and try to derive lessons from them and their success. One of the places I've seen this really successful, AWS does this extremely well. They have an ecosystem, and there's a ton of players that make all their money managing AWS or running tooling off of AWS and all kinds of things. And then slowly AWS will pick up and internalize some of those capabilities. Kind of doing the same thing, and expanding then their reach and their offerings more broadly.
Yeah, in hindsight, so I spent some time leading the online acquisition funnel for personal lines and loans for one of the larger banks.
Hmm.
And quite frankly, as we were trying to build and grow and drive, improve customer experience and those types of things, looking at those other lenders, SoFi and Prosper and those types of things was something that we looked at. What about their experiences? What about it was attractive? Attractive to customers. Now, some of it, as I mentioned before, had there were specific risk profiles that we had to align to that maybe are a bit different than some of the other lenders, but still their experiences is absolutely something. How do you build a one-page application, for example, or something to that effect?
Mm-hmm. Mm-hmm. That's really interesting. So another big meteor in the financial services space has been blockchain. It continues to be in the news, although not in the same way it was a few years back. Um, so, I'm curious to hear your viewpoint. Is blockchain a fad that has run its course, or is it actually finding its product market fit and starting to deliver on its promise?
Yeah, really interesting question. And I believe the
Time to
latter.
break out the crystal ball.
Yeah, right. I
Yeah.
believe the latter. I think blockchain has a ton of upside. For me, and this is my kind of just personal viewpoint, it's less about crypto and currencies, and the reason and the rationale that it was initially to develop or developed. But I think through some other use cases, and there's an example that I typically point to, and I think it's back in 2019, and I believe they're still utilizing it today. Bank of China began utilizing blockchain for several non-crypto related services. And so in
Hmm.
particular, the one that's really fascinating to me is real estate, right? And they were using it to
Mm-hmm.
drive several key business objectives. And if you think about the rigor around legal documentation and the need, there's this big opportunity, right, to make it cheaper, quicker, reduce operating costs, increase the efficiencies of processes. And I think many folks are seeing success, or at least huge opportunities for blockchain from that perspective.
Mm-hmm.
So I think that many agree the technology hasn't come and gone, as maybe your first part of the indication indicates, but I think folks are really ideating now on how we might be able to use it for things outside of cryptocurrencies.
Yeah.
And I think and then how we might execute, right? And that's probably more than anything, how do we execute upon it in the regulatory environment that we spoke of earlier? I'm excited about blockchain. I think like I said, I think
Mm.
there's use cases. I think the most interesting one, or at least one of the more interesting ones, is utilization in real estate and real estate acquisitions and sales and
Well,
everything.
you make a really good point. I mean, the blockchain has become synonymous with crypto, but its original intent was distributed ledgers and settling contracts. And you think
Right.
about real estate. Real estate's the first time I learned the word escrow. And it's all about like, hey, if both sides do everything they're supposed to, the escrow company will release the funds to the seller, if all the conditions are met. And which is sort of fascinating to me that these companies existed that just held on to the money in between and checked that both sides did what they said they were going to do, and then release money. But blockchain has a real chance to disintermediate that
Absolutely.
transaction. and then you don't need trust. You don't need a trusted third party. You need, you can trust the blockchain. It'll check all these things, and then it's a distributed ledger, so it's really hard to cheat.
Yeah, it'll take us some time, I think, to get there. But I think there's a model that's been developed, that a blueprint that folks can likely leverage. It'll be some time for us to
Yep.
get there, but I absolutely think there's a use case for it. Or so if
Well, and it's so interesting to watch that the crypto hype cycle has both benefited and just damaged blockchain's potential. So hopefully, exactly as you highlight, we get past that and we start to get back to blockchain and what its original purpose was these distributed ledgers, distributed computing, trust through distribution rather than other means that we have traditionally used. Yeah, that's really interesting, and I agree with you. I think that blockchain's got a future. One of my favorite parts of hosting this is I get to hear stories, good stories about what clients are doing. And so if I was asked to ask you to tell a customer story that encapsulates the art of the possible in this industry, what would that story be?
I think there's two that come to mind. And one, quite frankly, Scott, you may be a little more familiar with than I am. It's top of mind, just because it was the use case was presented to me the latter part of last week, I believe, or maybe it was earlier next week. And it's specific to LiveX, right? Which is essentially the NASDAQ for the fine wine market, and something that 3Pillar developed and provides the ability to trade with collectors and merchants worldwide, and multiple 6 continents, 35 countries, right? And in real time wine prices, really opens up the wine marketplace, and helps also facilitate payment and logistics. And I'm not a wine connoisseur, much like I'm not an economist, but it fascinates me, right? And so that's one that immediately comes to mind. That was just thinking outside the box, and something that was developed in specific. I think the way that it was explained to me, it was the NASDAQ for the wine market. The other thing, as I think about taking a step back as an industry as a whole, I'd be remiss if I didn't just call out the core banking and mobile apps, right? And we've done some work with, as core banking, you can include insurance in there, and we've done some work certainly with Geico and others. But I think about the capabilities that exist within the palm of your hand, right? The ability to check balances, get details about specific transactions, transfer and money movement across accounts to other people, to pay bills. You can deposit your check remotely, alerts, all these different types of things, the ability to open an account. And then you layer in some of the security components, cybersecurity across biometrics and face recognition, two-factor authentication, and taking a step back, the effort to facilitate those activities and provide that capability within the palm of your hand or on your desktop is almost beyond comprehension, right? The systems of record that need to be hit, the different platforms that are being touched, integrations of off-us systems like maybe the bureaus. It's really a tremendous undertaking. And think about all the services folks pay for today, right? Essentially, online mobile banking is really a significant cost for the financial institutions, but it's really a benefit of your checking, savings, or your account, right? You may have to pay.
We don't pay extra for the online features. Yeah.
And then if you take an additional step back and you look at the core capabilities and innovation, it can really almost be found in every fintech app today. And so, it's a great question. I think there's absolutely some neat new technologies out there. But I think if you take a step back and think of what started it all, to a certain extent, mobile banking is awfully impressive digital product for sure.
And I personally, I love that example. I use my Bank of America mobile app as one of my favorite products, and partially because it's not, I don't buy it. I just have my money with Bank of America and they give it to me. So it's not, is it a product? But of course, it has to be intuitive. I have to trust it. I mean, it's really funny. I always love to tell the story that my wife she doesn't trust the Bank of America app to deposit checks. So she hands them to me so that I can deposit them over, and she knows I'm going to use the app. So
Right.
she's just like, you do that. Like I don't want to.
It becomes your fault, Scott. If something goes
Well,
wrong, that's what happens.
Let's be honest.
Right?
That's totally.
Yes.
But it's just the psychology of it. But then you think about from a bank standpoint, like how many tellers you need, how long you need to stay open, the number of branches you need fundamentally change, and you see the rise of purely online banks that'll pay your ATM fees to go through the Cyrus network or others. It's fascinating to see that innovation very much changing the relationship between people who need banking and people who provide banking. I love that I don't have to go to a branch. My grandmother, until she died, would never not go to the branch to do everything. She didn't trust the ATM machine. She didn't trust checks either. She would drop off cash at the utility. So just really interesting to see, as we watch the intergenerational shift and the technology shift. I think you're right to call that out. The fundamentals of banking are changing, and that's and the relationship between the customers and the banks are shifting and it's kind of mobile has really been a touchstone for a lot of that.
And I'll take it one step further, Scott. If you take a step back, and as unfortunate as the pandemic was, if you look at pre-pandemic, it was as a again, working with some of the larger banks in the digital space, as I would say, even in the 2010, 2012 timeframe, the digital organizations, virtual channels, or whatever they would call it back then, were aggressively going after banking leadership to say, hey, look how great digital products and the digital product and channel is. Look at all the things that we can help you facilitate and what have you. And the reality of it is, although they put money into the infrastructure and support of it, it really was an afterthought. And then as you got into the pandemic, there was this shift, or at the very least, it accelerated the shift on both leadership within financial institutions, but also consumers and customers on, I have no other choice, right? I have to use the digital.
Still have to bank.
And it's like this aha moment, right? It's like, oh, wow, this is great. What do you mean I don't ever have to walk into a bank again? And so, kudos to the banks that they had the infrastructure to support that rather significant transition. And there was a lot of folks working behind the scenes. When many people weren't working during the pandemic, I would say, because I was one of them, the digital teams were working tirelessly to make sure that the systems were up and running to support the customer. I mean,
the shift in load must have been incredible.
It was significant for sure.
Yeah, totally. Well, and all the more reason to use things like cloud technologies, cloud infrastructure, having more elasticity in your architecture. As the old joke goes, no one expects the Spanish Inquisition, right? So, be future ready. And financial services has struggled with that in some cases, but it seems to be getting stronger. So on that note, and a little bit of a change in focus, but customer centricity is something that we talk a lot about and hear a lot about as an enabler of innovation. Yeah, how can you really be delivering new value if you don't know your customers really well? And this is something that in financial services, it's not a strength necessarily. There's a lot of jargon. A lot of people complain about a lot of the offerings are opaque and difficult. It's hard to figure out who's getting paid, especially if we think about the investment side of financial services, right? And we've been hearing in the news quite a bit about one violator in particular has been paying a lot of fines for misleading customers and being somewhat predatory in nature. And I realize we could do an entire episode just on this point, but I'm curious, in a shorter form, how do you think financial services can shift their thinking to think more about their customers and how they serve them, and not just about someone to fleece for profit?
Yeah,
to hit a
again,
target.
another really good question and a tricky one. right? Quite frankly,
Hmm.
I tend to think there's a bit of a misconception, right? That there is certainly a good bit of news out there about the mistakes that have been made, right? And it does absolutely seem like there's a steady stream of those incidents, right? You can look
Hmm.
at Zell, right? That was up in the congressional meetings recently. There's a larger card issue dealing with some card classification challenges that are charging merchants more than potentially they should. Fictitious accounts being opened online or even through the phone or even in branches. So, and I make it clear, absolutely no patience for those decisions that are made out of malice or greed, right? But I think if you look at it in context of the billions, almost trillions of transactions and interactions that occur, it's really a finite subset, right? And it should absolutely should be getting the attention that it deserves. But if you break it out into the two categories, right, that greed-based fictitious stuff, and then the issues that are more tech and systematic in nature, and I think I'd probably like
Hmm.
to lean in there a little bit because I am biased. I have worked for two larger financial institutions and organizations. I am empathetic, and I've worked across multiple functions, some in sales and sales leadership, incentives, and then the latter part of my career into digital. And I can say, Scott, like wholeheartedly with sincerity, there is a tremendous amount of focus on doing the right things for the customers. These organizations not have very the best intentions of their customers in mind. You can see that, and there's evidence in that in way that they're beginning to organize and execute. You've never
Hmm.
heard of roles like chief experience officer, chief or head of innovation and design. These roles just didn't exist, right? And
Hmm.
so if you look at it and had been part of developing strategies across personas and customer journeys and experiences, there is an effort to focus on the customer. And I'd say that the vast majority of folks, 99% of them are doing really good work on behalf of the customer. And so, the things that are really kind of challenging, I think, you know, um, things are challenging that are impeding their ability to really personalize or really have customer focus in mind. Would really, in my mind, is some of the back end systems in which, there's significant complexity. Delivering on the experience on the legacy platforms are really challenging, and there's just
Hmm.
a lot of moving pieces, right? You have line of business and strategy, risk, regulatory compliance, and those types of things that really make it difficult to deliver or change at the rate of some of the fintechs. And
Right.
so, and that also can find its way into errors and mistakes, because of a miskey, because of a coding update, because of something not done out of malice, right? Done
Right.
out of just a pure error,
Just
mistake, or what have
complexity.
you.
Yeah.
Could change a card category that ultimately makes it a merchant being charged more for the processing of a specific card type. So I,
Yeah.
I think it's important, just to kind of recap. It's a little bit long-winded, but to recap, I think it's important to break the two out: malice and greed versus the things that are just technical in nature that are likely more impacted by the systems in which the experiences reside on, and the intentions are good. They're making move and progress at the higher levels of the organization to organize around the customer.
Yeah. Well, but I'll link it back to a comment you made earlier about CFOs being, somewhat tight about investment when the ships are down. I do think that I think we probably both believe that the winners are going to have a strategy that transcends economic cycles, and invest accordingly. Make sure your fundamentals are sound. Make sure you got a strategy that isn't dependent purely on the economic cycle, even though, of course, that's going to affect top and bottom line. Um,
Absolutely.
but the future's coming, whether you are investing or not. So
That's exactly right.
um, that's excellent. Yeah, no, and it's definitely an interesting time to be in this sector, and I'm excited about what Three Pillar can do to help companies make that investment, stay predictable, safe, secure, get the fundamentals right, but also take advantage of innovation. Um, a lot of exciting opportunities there. And you know, as you talked about, some of these older systems are ones that these companies fear. They fear touching them because of the complexity and the risk involved.
Absolutely.
And we're actually working right now on our app modernization offering and talking a lot about how do we take someone on a journey through that app modernization that builds momentum and trust and courage as they go through trying to modernize these monolithic systems that they've relied on at the core of their businesses forever and ever. So really interesting time, I think, for the industry and exciting from our perspective in terms of what we can do to help.
I would agree. Several years ago, there was never even the talk of banks taking, going off-prem and moving stuff into cloud-based technologies. Now they have multi-cloud strategies. And so just to piggyback off that, I think the time is right. And I think everybody is kind of on the same page that they have to make the investment and start now. So it's absolutely an exciting time.
Yeah, and you do want to proceed with caution because
Absolutely.
the risks are real. There's no anyone who tells you differently is a snake oil salesman. So, with that, and to wrap up, if you're okay with it, I'd love to take you through a quick speed round of questions. Just a few questions we would like to ask. Get your off the cuff answers.
Absolutely.
All right, cryptocurrency, bull or bear?
Bear. Although I'm intrigued, I think PayPal just announced a recent move to secure crypto by the US dollar. I need to dig into that a little bit more, but frankly, I'm a bit old school in thinking. It's in my mind, crypto really needs to be backed by something, and you could argue that our own dollar isn't, but that's an argument for another day.
Well, I definitely like it when Congress pays its bills a lot better than I like the dollar better. So I understand you were a soccer player in college, and you live in North Carolina. So I got to ask, did you go to Wrexham versus Chelsea?
Unfortunately, I did not. And yes, I did play soccer in college. It was a long time ago. But
what position?
Unfortunately, I didn't make it to the game. But I was able to make it out to a Charlotte FC game here not too long ago. What a great experience. And quite frankly, it had been a while since I've been to a professional soccer game. And I remember growing up, seeing it's really exciting time for soccer because I remember growing up seeing Pele play for the Cosmos, right? And at the time, it was watching the best player ever, to kick soccer ball. And now this generation has the same opportunity to see Messi play. And so
that's right.
And by accounts, he even supersedes. There's a Ronaldo Messi argument, what have you. But
I'm all Messi.
I'm
I
with
gotta
you.
be honest.
And no disrespect to Ronaldo, but
not at all. Amazing player. But I got to see Messi in person, so
that's fantastic.
Playing for Barcelona, which is amazing.
Oh wow, that's fantastic.
Yeah, with my family right before the pandemic, no less, which was definitely a highlight. It's really nice to see the MLS coming up as a destination for some really great players and get to see them, even if they're in the twilight of their careers. It's still exciting. They're still amazing players. Recommendations for required reading, especially as it applies to innovation in financial services.
Another good question. And frankly, a shameless plug for the product mindset. In full transparency, it was one of the key motivations for me joining 3Pillar. That and the people. It really helped my thinking, shift my thinking as it relates to digital product development. And as I took the next step in my career, I felt that there was true value in the way that 3Pillar and the product mindset viewed digital product development, and it would be of significant benefits to the financial services industry. So that's certainly one. I'm currently reading Amp It Up by Frank Slutman, the chairman of Snowflake. I started it a while back and then got sidetracked. So I'm restarting that. So that's less product. And then there's on deck is a book called Banks and FinTech on Platform Economies by Paolo Cerrone. And it focuses on banking as a service and a move, which I think is interesting, move from business outputs into customer outcomes. And so I haven't started that yet, but it's on deck. I'll read it and I'll give you I'll give you a book review maybe in our next
Yeah, I
conversation.
can't wait. Yeah, we'll have to make sure we get together next time you're in town and break that down. I'd love to hear more about that. I think platforms is. I mean, I'm having more and more conversations with prospects about platform strategies in their space, and um, I mean, it's good for our customers. It's good for these businesses and exciting opportunities. But there are good ways to go about doing it, and there are less mature ways of doing it. So we'd love to help clients on the mature their product development so they can take advantage of those opportunities.
Absolutely.
So that's exciting. Very cool, Rob. Thank you so much. Really love your insights on the industry. It's not a place that we tend to think of rapid innovation, but geez, it's been an exciting last 10 years at least. That we've seen a lot of movement in that sector and a lot of changes. So
Yeah,
thanks for sharing with us.
My pleasure, and look forward to future conversations.
Sounds great. Thanks a lot, Rob.
Thank you.